management at Havells India is with us. Havells has formed an equal joint venture with China's Shanghai Yaming Lighting. That's the news which came out yesterday. The joint venture, according to Havells, is expected to generate revenues of $100 million in 3 years' time. Anil Gupta, Joint Managing Director at Havells India. Good morning, Mr. Gupta. Thanks very much for your time. Prashant this side. Two parts to this. A, why the joint venture? I mean, is there a cost advantage involved here? And B, you already have a presence in China. So, I mean, how would this work? How would this joint venture, do business without sort of having a conflict of interest there?
You see, the presence in China that we've had till now is on two counts. One, we've had a very strong R&D base there. We have close to about 150 engineers there. And secondly, more as a sourcing base. So we have, for these two aspects, we were already present. But what was lacking was a manufacturing base where we can put in our own technology, high technology products, especially coming from Europe. And we needed a plant outside of Europe in a low-cost area, and there we wanted to control our own technology, and that's why we wanted to set up our own plant in China. This company that we have tied up with is a very respected company, a 80-year-old company, one of the pioneers in lighting in China, and we believe that this joint venture will be beneficial in putting high-end products manufacturing into this, which will be used for the global markets as well as for the Chinese markets.
Primarily, one would assume for global markets, or the bulk of what you produce there would be sold in China itself?
Now, in the initial stages, the bulk of it would be produced for the global markets, but as we launched our brand Sylvania in Chinese market last year, we expect that over a period of time the demand for those products will grow in China as well, and in the next 4 to 5 years the Chinese market will also be a sizable portion from the joint venture.
What is it exactly that this particular joint venture and Yaming that will get on the table for you? Is it technical expertise? Is it the presence in the market? What exactly will be the synergies and what it brings on the table?
It's a mix of, what we will bring to the table is the technological expertise. What the other partner, our partner in China, will bring in is the manufacturing expertise and technological manpower, access to raw materials at a lower cost, and also it will provide a good base for marketing our products in China. So it's a combination of various factors that has led us to get into this joint partnership.
So, if you were to take a look at Sylvania, will Sylvania be sourcing products from this joint venture, and what is the advantage of doing so?
Yes, Sylvania will be sourcing products from the joint venture. We are already sourcing these products, some of these products from China, from other manufacturers. But as I said, technologically, if we can put in our own technology into this joint venture, then the major advantage would be that we will be able to control our technology. And of course, there will be a cost arbitrage as well.
When do you kickstart activity with this joint venture in terms of supply of products, in terms of getting into the market?
The first phase of production would start in April 2012, but the major production with all the new products which are going to be put into this joint venture will start in November 2012.
And the benefits of that on the balance sheet will kick in immediately?
Yes, immediately it should kick in, because that will be additional generated revenues for the company. So in the first year itself, we expect almost about $30 million and going up to about $100 million in the next 3 years.
Do you think you'll be able to attract good margins from the products that you sell via this joint venture?
Well, the idea behind setting up this is to expand our margins globally, because as I said, we are sourcing some of these products, and by manufacturing we'll be able to control our technology as well as cost arbitrage would be there. So we'll be able to expand the margins.
Any other geographical joint ventures that you're aiming at in order to increase your footprint abroad?
Well, we have a sizable footprint in Europe as well as Latin America, apart from India. And China and Africa are two markets that we are looking at strongly. This is the first step in the right direction towards our setting up a base in China. And of course, the next step would be Africa, to look at whether it is organic, inorganic, any kind of expansion. That's what we are looking at.
Mr. Gupta, just a quick point. I mean, the yuan is appreciated in 2011 by about 5% or so. I mean, there has been calls from the international community for the currency there to, appreciate a lot more, for the government there to let the currency appreciate a lot more. Here in India, we've been talking about, I'm just not talking about your joint venture. Here in India, there's been a lot of demand that there be an import duty to make Indian exports and Indian manufacturing much more competitive. Power equipment. As an industry player, what do you see? I mean, how do you see this panning out? Even if there is how large is the differential essentially with the yuan appreciating? Given that at some point the government here imposes an import duty, are we going to get anywhere closer to achieving parity in terms of costs of production between both the centers, or is that still way out?
No, I tell you, Indian industry is not far behind the competitiveness from China. In most of the product categories that we manufacture, for example, in our switchgear, in cables and wires, in our fans, we definitely feel with the kind of investments that we made, we are amongst the lowest cost producers in the world. There is a specific situation as far as lighting is concerned. It got developed as an industry in China in the last 20 years or so, and about 60% of the lighting production in the world is made in China today, and that is the reason that there is an access to raw material and as well as manpower in China. I would not say that there is a whole lot of cost difference if we set up a plant in India and China, but the ease of setting up a plant, the ease of getting the manpower and raw materials is far greater in China at the present moment. Over a period of time, these things will pan out, but today one has to act more as a global company rather than just as a local company. So that is the reason that we feel that this joint venture in China will be a good step in the right direction for the long-term prospects for the company.
So you're saying, the demands are not entirely justified. It's in many of the product categories, the cost differential is not that large. The cost of production is comparable, you're saying, to China in some cases.
Yes, in many of the product cases,
right,
yes,
okay.
But not in all cases, and that's why, yeah.
Okay. Just a quick word before I wrap this up. You launched your consumer appliances business recently. You've been advertising quite heavily. What's the response been? I think it's been about 4 or 5 months now that you've got products to the market. What's been the response so far?
Well, we launched domestic appliances primarily because today Havells is now considered a premium brand in the consumer appliances category, and we were already in fans and water heaters, and we got a good response in these product categories. The distribution channel also is well set for these kind of products. So it is still early days, and we believe that the initial response has been quite good. The advertising spends that we are making is sort of an initial burst to make the people aware, as well as the distribution channel aware of the product category, and I believe that this product category, given the strength of the product, brand and distribution channel, will be quite successful. As I said, it is still early days, and I would hold my comments till we get actual revenues, what we have budgeted in our projections.
All right, thanks very much, Mr. Gupta. Good luck. Appreciate you joining in this morning with that perspective. Havells India in focus. I believe we've got shots of Mr. Anna Hazare here in Mumbai.